Hello, everyone. Thank you for joining us for today's episode. First, I'd like to give out a shout out to Bequant Group for supporting this. Bequant is a global digital assets capital markets firm. Their products and services include low latency spot exchange trading, prime brokerage, margin financing, cross collateral management, custody, fund administration services, and OTC trading. For more on the Bequant Group, go to bequant.pro. Again, that's bequant.pro. They're a market leader in the capital market space in crypto. If you like this episode, please hit the subscribe button below. Thank you, everyone, and enjoy the show. Hey, folks, thanks for joining us today. Really special guests on. We got the one and only Jon Najarian and his cohort in crime, CJ. Guys, thank you for joining us. Really, want to talk about a few things today that are exciting things going on. Of course, everybody knows Ryan, my cohort over here. But yeah, Jon, who I haven't gotten a chance to see in a long time, as well as CJ, due to what's going on today. It's been quite some time. We're coming live from 4 different living rooms, I presume, today. So, one of the things, Jon, if you could kind of just briefly explain your background and how you are where you are today. And by the way, I think probably voted one of the most charismatic stars of the halftime report on CNBC. That's what I heard.
Well, if only that were true. But thank you very much, Alex. Great to be on with you and Ryan. CJ and I certainly appreciate it. We've been spending a lot of time on getting this crypto room up, and we're pretty happy with the app. CJ, can we say it's been approved for the App Store over at Apple?
We still got a few things to build, but for desktop and mobile accessibility, people are going to have that. So,
yeah, it's pretty cool, folks. We knew a lot of folks, Alex, wanted the ability to do mobile, not just for crypto, for everything. And we had offered it previously when we owned a brokerage firm. Right now, we are not a broker, but we do have relationships with a couple brokers. And we knew that if we had a trading room for crypto, that a lot of people want to go right from that trading room right to a trade. And that's one of the reasons we had to build this the way we did. I think it's going to be just hands down one of the best apps out there for trading crypto and for giving people access to a bunch of smart folks in a room, because it's not just what we say, not just what CJ and Matt think is going on in crypto, but we give people the ability to go back and forth with each other in our rooms. So it's much more interactive than it is just us posting and telling people what to do.
Well, let me back this up for a minute, because you just didn't arrive here saying, hey, we're going to invent a crypto app and have people, form a community and trade. I mean, you and your brother particularly have some serious experience on the traditional side, both from the educational and the execution on the options market. And that sort of led into this whole transition into crypto. Am I right?
Very true. We built out a big firm called Trade Monster, and that did everything but Forex and crypto. It did everything else: stocks, options, futures, mutual funds. I mean, you name it, we did it all. Sold that to E-Trade in 2016, and the next year I started getting involved in crypto, 2017. CJ and Matt are 2 young guys that were at that time, they were probably trading it and mining Bitcoin in college or dorm room. And I'll let CJ tell you about that. But as we started really seeing the growth potential for crypto, Alex, we really wanted to find folks that were true practitioners. And again, CJ and Matt are the 2 guys spearheading it on our side, and they've done a great job building out a room and a platform that is almost identical to what we do for stocks, options, and futures over on the traditional market side.
Awesome. Yeah, no, I've seen CJ and Monty doing their thing on video. Definitely, CJ, to give us a little background on how you came to be into crypto and what unlucky bar you met Jon in.
Yeah.
Yeah, so going back to like 2016, 2017 is when I first discovered Bitcoin. I had known about it before, but I didn't really take it seriously. I didn't engage with it. I was looking for a form of passive income, and I found my friend Monty from across the hall. He was an IT specialist and knew a lot about technology, and he was mining Bitcoin in his dorm room. And so he was explaining it to me, and I'm like, this is brilliant. Like, this is awesome. So I fell down the rabbit hole like that, Austrian economics, all of those types of things. I went out, got a computer, began mining. Then I experimented mining with, proof of stake coins and various other cryptocurrencies. But yeah, can't beat the free electricity in the dorms. You just turn the computer on in the morning, go to class all day, come back before you go to bed, turn it back on. I mean, the room gets really hot, but other than that, it's not too bad. As for how I got related or affiliated with Jon, during this time in 2017, the director of business development at Investitute, which was what our company was called before we rebranded to Market Rebellion, he reached out to me and said, CJ, I know you know a little bit about crypto. Would you like to publish content for us? And I said, absolutely, I would love to. And so I've been writing about 2 articles a week for Investitute and then Market Rebellion. And I did that for about 2 years. And then up until about a year ago, that's when we really started focusing a lot on crypto and building out this room. So that's what leads us to this point.
Very cool. Yeah, Ryan, did you?
I was going to comment on, they take an education first approach here, which I think is great because you have so many people out there shilling projects, shilling platforms. And what kind of difference have you noticed in taking that type of approach, taking the sales first approach, I guess?
Well, we want to educate people why crypto is important, obviously. And really, it's important for us to give resources to the millennials because this is the demographic who's going to truly drive this asset class over the course of the next 20 to 30 years. And so one of the things I'm very excited about is that this product is going to be very affordable for any millennial who wants to get in. I'm not going to name a price today for legal reasons, but the coronavirus lockdown. It's going to be in the range of Hulu or Netflix subscription, something that the millennial demographic is accustomed to. Because like I said, we got to educate this group of people why Bitcoin and why cryptocurrency matters and how it can create a better and freer world.
Okay, great. And I guess to that point, how wide of a universe of cryptocurrencies and digital assets are you guys supporting initially?
Well, so, I think you guys are doing it with a friend of ours, right? Steve Ehrlich over at Voyager. Is that kind of your partner in this?
So that's where our data feeds are coming from.
Yeah.
So the assets that are currently listed on Voyager, we will be getting live data from all of those.
Okay.
It's Bitcoin and about 15 to 20 other altcoins and utility platforms. So we will have data for all of those, Bitcoin Cash included.
That's awesome. Well, Roger Ver will be happy about that. Now, CJ, are you going to be then? Are you going to be kind of put out front as almost the market rebel analyst in the crypto scene for the company? Is you going to be doing your commentary and building up that the video and the streaming aspect as well?
Yeah, we're definitely going to do that. And, the primary aspect of the product is weekly trade ideas, actionable trade ideas, not only from myself, but from our other analysts at Market Rebellion on a weekly to semi-weekly basis. And, I'm not just going to be saying like, oh, I'm bullish, oh, I'm bearish. These are going to be exits, entries, stop losses. Anything that we do, you'll know about it in real time.
Are you going to have actionable alerts by any chance, like you do with the option side of the business?
Well, the option side is managing, unusual option activity. So, very unusual trades, sometimes, whale alerts. We're not going to have any of that specifically with Bitcoin because it's not as applicable yet.
Sure.
I think when an options market does emerge from Bitcoin, I think that'll be a much more useful algorithm to incorporate.
And
very cool.
how wide of a range of algorithms or trading strategies will you support from the beginning and then going forward?
Well, we focus a lot on technical analysis, and that's because, you know, Bitcoin has been, I mean, in all honesty, it does trade very speculatively, and it does follow technicals more than traditional assets we've found. And so we take a technical approach, but we also, in our education curriculum, you know, we really do try to give the best way to explain, you know, why Bitcoin fundamentally has value.
Yeah, I do see you doing a lot of TA when you're going through the video on stuff during the course of the week. You know, let's ask the important question: where do you think what's happening with the market? Where do you think it's headed right now in the digital side? And do you ever think it's going to be able to shake its bigger brother, you know, of equities and following the Dow?
Yeah, so I think it's difficult to talk about Bitcoin first without addressing the S&P and the equity market. And this is because they've been very correlated as of late. I know I told you before the show, I do believe the low is in for March in both cryptocurrency and the SPX. Do you mind if I share my screen real quick just so I can—
Go right ahead. Absolutely.
Okay. So you guys see this all right?
Yep.
Yes, sir.
Okay, so this is a slide that Tom Lee shared with us a few days ago from Fundstrat, and I thought it was very compelling because honestly, it outlines the top 10 you know, V-shaped recoveries throughout stock market history. And what Lee concluded is that markets tend to rebound proportional to the rate and time it took them to decline. So considering how fast we fell in our last, you know, decline, if we were to follow this model, then the S&P would have had to reach a price of $2,800 by late April. And we have, you know, we're trading above 2,800 right now. So from a technical standpoint, that's pretty bullish. You know, everything is going according to plan from the technicals. Now, with Bitcoin, I'm bullish for a few different reasons. You know, I am bullish because I think that people still, you know, equate Bitcoin something kind of like a tech stock that is somewhat speculative. However, you know, we have a fundamental event coming next month, and Bitcoin does have relatively stable demand. And when you cut the inflation schedule in half, that demand, if it remains, the price has nothing to do but increase. So I am bullish on both the S&P and on Bitcoin going into this month and, you know, hopefully over the course of the next year.
And what effect ultimately do you think the halving event will have? Do you think it'll be a slow rise or a fast rise?
Same question I was going to ask.
Yeah, that's a good question. Because if we look at it historically, it's not like, you know, boom, the halving event occurs and then we just go parabolic. Historically, it has taken, you know, about 2 to 3 months for the market to catch up to that fundamental event. So I would not be surprised if we don't rally immediately after the halving. I think it's a more gradual thing that is going to affect Bitcoin over the course of, you know, years. And as the nature of every halving, you know, each one is less significant than the previous one. That's, you know, just how it works mathematically.
Well, you're disappointing a lot of speculators out there right now. I mean, do you have a feeling that we're going to get a little retail run up though going into the halving, you know, with the herd mentality, or do you think even the layman is going to be slow to pump the price?
Yeah, so retail is interesting, right? Because we never know like how interested they actually are until like they all come in at once. For the people like you and I, the people in the space, I believe the halving is priced in because we know about it. It's something, you know, we're modeling in stock to flow and something that we're actively paying attention to. The people who bought Bitcoin in 2017, that retail speculation, they don't know about the halving. You know, that aspect of the Bitcoin price is not priced in for them yet. And so if we get a rally past 10 or even 15K, yeah, I see that retail money and that interest coming back in. And, you can see that in, the registration and opening up of new Coinbase accounts and new wallet services. So, those things can be measured to some degree.
All right, cool. And John, this week has been, and I think you summed it up in the tweet, I believe it was 36 years of experience, and you haven't seen what's happened this week in all of that time. And referring to oil, presumably, I think this week I've heard more buzzwords used in one sentence, such as negative yield roll forward and all the other buzzwords that you can do, backwardation. Give us some clarity on what the heck happened.
Well, you guys know, and I won't belabor it, but when you have any of these contracts on the future side, a future is a good faith margin deposit. Full stop, end of story. You didn't buy anything. You made a good faith margin deposit to do something in the future. So in the case of crude oil, that might be that you were going to buy crude oil at some point in the future. You pick the expiration. So for instance, May expiration. There was about, I want to say there was 100 and some odd thousand open interest going into the final 2 days of trading. Those people who are still in, if you will, to the final couple days of trade are either stupid, one, hugely undereducated about the product, second possibility, or third, there's somebody who are going to take delivery. And, there are real reasons people take delivery, as we all know. If you're Valero Energy and you bought a bunch of futures on crude oil because you're actually going to take delivery and refine it, or Holly Refinery, or any of the big, U.S. refiners, you could have a reason to use a whole bunch of crude oil. If you're Alex or Ryan or CJ or John, you have no reason to be in that.
You fall into the uneducated, stupid group.
Well, fortunately, I don't think any of the four of us had it, but we weren't going to take delivery. So the problem is that some people, they've done this before, by the way. They've done this with gold. And you and I, Alex, we should do a whole 1 hour show on gold and what happens when somebody says they're going to take delivery of gold and then they kind of figure out, oh my God, every one of these is 100 kilograms of gold. I have the money for it, let's say, but where am I going to put it? Because, there are delivery points and all that. So there are, again, not to belabor it, folks, but everything from soybeans to bushels of corn to kilograms or 100 ounces or whatever measurement of silver, gold, whatever, platinum. They all have delivery points. Where do you have to deliver it? And you as the owner going into that delivery or that settlement, as they call it in futures talk, need to have the ability to take it if you're going to take it. And so into that final day of trading, there were a lot of folks who said, yeah, I'm going to take it, no sweat, blah, blah, blah. They had no ability to take it. All the storage was spoken for. So it went negative because all these guys are just like selling like this. Now, in actuality, Alex, I think Mark Fisher and I, and Mark's the better person at this, Mark said about 4,600 contracts traded below zero for crude oil. And every contract is for 1,000 barrels of crude oil, folks. So 4,600 is 4,600 times 1,000 barrels. Obviously, a bunch of dummies were in there and they couldn't take delivery. You can't just dump it because it's an ecological, disaster. The EPA would fine you many more millions than you'll lose on that contract if you just said, fine, I'm not even going to show up. Yeah, it's my contract. Just dump it out. Are you kidding me? And so people were saying, well, we should send down a bunch of semis and fill them up with oil. No, it's not a valid transportation vehicle for crude. There are so many reasons that this couldn't have happened, but people just weren't paying attention, Alex. So that's why all of those, like you said, buzzwords, contango, backwardation, blah, blah, blah. That's why they all got so screwed up. I'll tell you this much, though. Every futures options trader now, for almost every contract, probably not for gold, but for an awful lot of other contracts, is thinking, I thought I could only lose down to zero. I didn't know I could go below zero on if I'm short a put, for instance. A put is an insurance policy, folks. If you're short that put, that means you've given somebody else the right to sell you at a price, the strike price. Mm-hmm. So if you were short crude puts at 10 when it was 15 or 17, Friday last week, the expiring May contract, and all of a sudden it goes from 17 to 0 to negative 35. People
You're paying
don't
to take it away.
You're short it. I mean, the person that's shorting it has the right to deliver to you at 10, and you're long it all the way into negative territory. Anyway, it was like I say, in 38 years of trading, I've never seen that. But now I can't say that anymore. I've seen it.
So for people who don't know how oil is priced, that doesn't necessarily mean that oil is worthless, though, because the contracts go below zero, right?
Right. And it also, Ryan, the settlement was not below zero. The day before the actual expiration, it went to negative 37.63.
Yeah.
Expiration, I think it finished at $8 or $10. I can't even remember at actual settlement, which would have been a day ago or so. It went actually to positive territory after that. And since then, the June contract, which is not the one we're talking about, but the June contract, which is where all the people who know what the hell they're doing, instead of, again, stupid or just misinformed, they're all in there trading Junes and Julys. They're not in there trading Mays for all the reasons we discussed. And those have jumped by 25, 30% like that.
So with June's contract, I'm glad you mentioned that. Do you see a similar situation occurring given the relative unlikelihood of circumstances to change in the country?
Well, here's the short answer, Ryan. The agreed upon cuts by Saudi and the Russians don't kick in until May 1st, which means that they're still overproducing by as much as 50% versus demand. Wow. Because there's demand maybe for 50 to 60% of what's being produced right now. The rest has to go into storage. And storage, by the way, went from, guys, you know this, but just for your listeners, went from $20,000 a day in a tanker to $300,000 per day. So when you've got a situation like that, you've got a serious issue. Could it go back to that? It could. We hope it doesn't. But again, they're not going to start, ludicrously. They didn't agree to start cutting back on production till May. So they're still overproducing like crazy. By, that 10 million reduction doesn't kick in until May 1st.
So do American oil producers reduce as well?
They are reducing those that can, but they're not being forced to by Trump or anybody else because it's America. We didn't have the ability to just tell them, shut it down. It's kind of that, you think that most of them that have the ability to would shut it down based on they can't make money at this level and they've filled up all the storage themselves. So American producers probably are and have been cutting back, Ryan, perhaps not as dramatically as Russia and Saudi.
Do you think this is a hot tip for industries such as airlines who now are going to have an extremely low cost of fuel coupled with, forgiveness bailouts or low interest bailouts? Do you think that's a recipe for rising stock in those sectors?
Great question.
It's their second largest expense. Employees are number one. Fuel is either number one or number two, depending where fuel is, Alex, for the airlines. Same thing for the cruise industry. But the destruction has been so widespread and they're just burning cash right now. And even though they're getting these loans, these support, which can be measured in the tens of billions for that industry, they're still burning a lot of cash. So it just depends how fast we start buying seats again. Because right now,
Sure.
they've cut capacity by anywhere from 60 to 90%, depending on the airline. So that means no cash in, and obviously a lot of obligations for what they've already sold to fulfill going forward.
So airlines don't look like they expect anyone to really return to travel this year based on what they've done with their loyalty programs. Everyone's kind of extended it into next year, so it might be a while before they start to realize the benefits.
Yeah.
Yep, I agree. I think they'll start flying more capacity by the middle of summer, Ryan, but that's still at least 2 months out. So, and that's just an increase from almost zero. It's not, I'm not saying back to normal.
Of course not, yeah.
So flipping back to the crypto markets, CJ, is your perception that we're going to continue to tag along, just trailing mimicking whatever the traditional, what the S&P does, or do you think that there's enough? There might be some, you have oil, you have other things that have just come into play in the perfect type storm scenario. Do you think there's going to be some sort of catastrophic thing that could blurp a market, the traditional side, and the crypto side won't follow? Or do you just think they're just going to be related? Do you think that it's an asset, and when people need liquidity, they'll sell it just like they'll sell an equity or a hard asset?
Well, you look at what happened in 2008 and 2009, where the Fed quadrupled the money supply. And, that doesn't result in immediate inflation because the velocity of money is very low. But, gold crashed in 2008. And it wasn't until 2009 through 2011 where gold began a massive bull market and then reached the all-time high of, roughly 1,600. I think Bitcoin is in the exact same boat in the sense that when traditional markets crash and gold crashes and commodities crash, the entire market is a giant waterfall, and cash really is the only safe haven. And so I think the S&P is going to have to get to some type of neutral territory in order for Bitcoin to continue to go up. I don't see a decoupling yet, so to speak.
Okay, and do you think that line drawn in the sand at 2,800 on the S&P is going to carry over to Bitcoin, just to keep it coupled, or it doesn't matter, or how do you see that from just a traditional inflationary deflationary point of view? Outside events on traditional market, I guess what I'm trying to say is outside events on traditional market will always affect Bitcoin in the short term right now, and continue to follow the S&P. Is that what you're saying?
Well, it has so far. Ever since we crashed and bottomed in March, the two have been roughly very correlated, right? Mm-hmm. And I think we're going to see that. I mean, I think that, like what I said before, the S&P has to be in somewhat of a neutral territory in order for Bitcoin to continue to go up. The reason why Bitcoin's different than the S&P is that it's going through a fundamental block halving in 1 month, where if the demand does remain relatively constant, when you cut the inflation schedule in half, the price has to go up. Mm-hmm. It doesn't. I don't like using the word always, but historically, this is how the asset has performed. Now you combine that with the fact that we're approaching, $8 and possibly even $10 trillion in stimulus money. That is almost 50% of the entire American GDP. So, I don't think it'll have an immediate effect on inflation, but throughout the next, 5 to 10 years, I think there will be a gradual effect in which the value and purchasing power of the dollar will decrease. And I think gold and I think Bitcoin and hard assets are a great way to protect against that.
Okay, very cool. Well, one thing I want to just know, I know John does 3 at 3 sometimes. That's correct, right, John? Are you doing it today by any chance?
Yep, I'll do it. I just won't have many charts.
Since we're pushing the hour, let me get this out of the way in part of the closing. Give me your three you're going to do before you tell your three for three guys.
Believe it or not, I haven't even done it yet, but I can give you two of the three. CCJ, which is a Camco. It's a uranium play. So that and Stitch Fix, believe it or not.
Huh.
Those were two of the three that I'm going to hit today. Okay,
very cool. Now, CJ, tell everybody where can we find out more information on the Market Rebellion crypto app, where we can pre-register or sign up to get notifications. Let everybody know where we can find this.
So if you want to learn more, you can go to marketrebellion.com/Bitcoin. I'll say it just one more time, marketrebellion.com/Bitcoin. But thanks for letting us share that.
Yeah, absolutely. And when people see this, your Twitter handles will be out, so they'll be able to catch you there too. And guys, I really thank you for joining us. I know you guys both have a tremendously busy schedule. I feel like we're working more from home than when we were at the office. I think the schedule's a little busier, but guys, great to see you. I'm glad everybody's safe. John, be well, my man.
You as well. Thanks,
awesome.
Alex. Thanks, Ryan.
Thanks, everybody.
Yeah, great.
Hey, folks, and thanks for joining us on today's episode. To learn more about Market Rebellion Crypto and their new crypto trading room, head over to marketrebellion.com/Bitcoin. Here, you'll learn everything you need to know about their upcoming product release. To follow them on Twitter, get them at @RebelsCrypto, @RebelsCrypto. That's their home, and hope to see you guys soon. Thank you.